So today I want to do something different and I want to do some trade reviews. Today we went 5 for 5. Was a really good day and it's been a very tough market. So let's kind of talk about how it's been and the trades that I took today. So we can see that we're in, we've been since September 18th, we've been in this range bound chop. It's really difficult, especially when you have a persistently high VIX. To still be in a chop like this means the market's pretty nervous, and that makes up for a lot of fake outs and not a lot of liquidity, um, which means to these bigger like gap downs and gap ups and very trappy, right? So today we actually had the breakout, but the breakout wasn't really that easy, right? We finally got the breakout. It was a big confirmation, but if you look at the big tech names, it was still pretty choppy. And Apple did lead on today. Apple was really strong, and we actually had a call out for last week. I know some members were in this Apple trade, because we did have an alert go off for it. Yeah, right here, Apple crossing horizontal. Weeklies can work. That was on October 8th that went off. So that was yesterday. So that was on the break right here. As you can see, the alert was set and it broke yesterday, and then it consolidated within the range. It didn't break down back below the key level, and then it ended up popping into today. Really strong, really good trade right there. So Apple did give some good confirmation, but overall, like Google's still really weak, Amazon's still really weak here, and Nvidia, the prodigal child of the market, is also still looking like it can roll over. So that makes it this really tough environment. The way you want to handle that is you want to control your sizing. So when I did take SPY calls today, I did take it on the break, but I came in small with some weeklies, some 580s. I called out for members. I told them to control your risk, treat it more like a lotto, because market breadth really isn't there in confirmation. So around 9:50 today, I called out some SPY calls with all the details that I covered at the beginning of this video. That was right about here. We had SPY defending the EMA trend all day, looking very strong. If you're just looking at this chart, in the 15-minute had gotten to an overbought RSI, which usually means higher highs are coming in. And so I called out that trade, and then right about here, we're up 100%, and I actually called for an exit. And you can see that if you're just following the EMA, you hold this trend until you break the 21 EMA typically. If you did that, you're pretty much actually exiting when I exited. Now, why did I exit early, though? Comes down to NVIDIA. This is the prodigal child of the market. The market tends to trend with NVIDIA. And we can see this breakdown in NVIDIA right when I called that was right before this candle broke. And it looked to me like it was about to break. So I said it's a good time to lock in, up over 100% right there. When NVIDIA's breakdown started to defend and play out well, I called that you could re-enter into some SPY calls with a portion of profits into Discord. We could see that it tried to fake out. It tried to break down through this, but this one candle right here is really not a stop, especially when you're trading with just a portion of profits. You pretty much size for zero in that case, right? I don't want to say anything like you're playing with house money, so don't worry about it. But we're in a small position here. Then we got the squeeze into the close that played out really well. You can either decide to take your profits or you can swing into the CPI data. Market has been for months now front running CPI data on days like today, and that's usually led to another gap up the following day. The only thing that's a little bit different now is that VIX is at 20. So it's still an environment where you kind of would be cautious. You would control your sizing. The next trade that I played, well, rather the trades I actually played before that trade, that one was just a little more involved, so I wanted to cover it first, was CCL. And by the way, for our members, you might see that I'm typing these out rather than having the automation. The bot's getting an update right now. Our coder's working on it. And he's trying to get it fixed for the past 2 days, so I've just been typing these out. That should be resolved by tomorrow. Hopefully we're working hard on it, or he's working hard on it rather. So CCL is a very basic, easy trade. We have a multi-year breakout here. 1, 2, 3, 4 touches. No such thing as a quadra top. Really nice breakout. Very easy trade. Love this type archetype of a trade. We get the breakout. It's strong. It's holding. around 10:10, I want to say. Yeah, around 10:10, called that I was taking some runners for 35%. Always be locking in some profits, de-risking positions, and then you just let the rest ride here. I mean, if we look at the 1 hour, we can see we're at a very overbought RSI here. So the likelihood that we get a nice continuation of the trend up is strong. Just continue to watch the EMAs there for me, and I'll continue to play this one, rolling out and up my positions. So the next trade was Netflix. Bought this morning. This one was a toughie, and new traders would probably really want to watch this full explanation here, because you could probably learn a lot. This is a trade in my early days that I would have definitely not made money on. So the setup is a break over yesterday's highs into a really strong 1 hour trend. And the reason I didn't take it on the open was because SPY hadn't yet given us full confirmation. It still looked really trappy. And I've been caught in a few traps. It happens when the market's this tough. So I want confirmation of that. We end up seeing it settle. And by the way, if you bought here at the highs, you're still not in profits by the close because of how much crush in the premiums there is throughout this chop. So it's really important you know when to take those and when to be patient. And when to recognize that, hey, the greater trend's still alive and it's okay to still play it even after it goes under your setup signal, right? So right about 9:16, I come into the trade. I actually came in on this green candle. Very simple, very basic, higher lows, higher highs being set here. So I come in on the trade. We end up getting stuck in some chop. Now, chop is rough, but there's no reason to cut. And as I put when I set up the trade, I had a really wide stop for the set on the pre-market lows, right? So I want to see the actual the trend fall apart. I want to see lower lows. We never got that, so there was never a real reason to sell here. And this is why it's so important to watch the chart over the premiums. Because if you're watching option premiums, you probably end up cutting this. I think that at one point they were down like 35%. Instead, we finished the day up with 35%. And this is a trade where you can decide to roll a portion of the contracts as well if you'd like. Not roll, I mean swing a portion of the contracts if you like, because we held the trend all day and the greater trend's alive and the broader index looks strong as well. Even if the broader index doesn't look strong, if Netflix kind of has price action like this, like into this NVIDIA breakdown and some turbulence on the SPY, Netflix ended up holding the trend and just kind of steadily melting up. That's really good relative strength. And that would be a reason to go ahead and swing a few of the contracts as well. And the last trade I want to cover was XLE. And this is really the reason I wanted to make the whole video, because all of these have different archetypes. So today actually is a great teaching day. XLE was about TTM alignment and a trend reversal. So we have what looks to be a reversal forming on the 1 hour. And I've been bullish playing this name. I pretty much sold the highs here. Looking, play this entire trend. I've been bullish on XLE. I'm looking same thing with like CCL. People are traveling more into the end of the year, into the holiday season. That's usually really good for energy. Never mind the also turmoil in the Middle East can also cause oil and energy companies to start to perform well. But the real confirmation on the shorter time frame for these positions is going to be the alignment we see. So on the 5 minute, we can see we're persistently strong here on the TTM. Then we have a breakout in tandem with the 10 minute and the 15 minute also coming in. That type of alignment tells me that, hey, this is likely going to break out. It looks really strong. So coming into this strength, I bought this position, I want to say around like 9. Let's see, we got in here around 9:30. So yeah, we bought into the strength here. And then after setting that, we can see that it breaks back down. So then we set the lows, we see the wedge development, and we start to look for the break. The cut is obviously if the wedge breaks down, it ended up not even testing the lows again. We kind of get the downside here, and then we pull right through to the upside. Really, really strong trade that you can, again, take a portion of the profits and swing the rest of the position. A really nice setup there for XLE and a really good day of trading. 5 for 5, no losers, all profits. If you want to trade with me, check out the link down below and you can join the Discord.